Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about Buzz ETF. This is also known as pretty much the Dave Portnoy ETF. He is heavily invested in this. He's partnered with them. But really, this whole idea behind the Buzz ETF is a very simple but fantastic and awesome strategy. Pretty much what this ETF does is it buys the most talked about stocks. That's it. On social media. So it has an algorithm that will go through Facebook, Twitter, Reddit, and among all those super popular Reddit sites like Wallstreet Bets, like stocks, and a variety of other Reddit sites, this ETF will buy the most talked about stocks on there. So right now, the top couple of holdings that Buzz has, the very first one is Tesla. That goes without saying. This stock is an absolute powerhouse. You can see major growth, solid numbers, and you can see why it's heavily talked about, especially lately here. The second one is AMD. You can see very similar thing, strong growth. Everything looks very, very strong. The next one here is Plug Power, PLUG. This one is more of the higher risk, higher reward, but you can see lately, beautiful upward trend. And not to mention, this stock carries a lot of potential for the long term. The other stocks that this company has is BB. This is BlackBerry, definitely more of a higher risk, higher reward. And this ETF does not care about fundamentals, does not care about technicals, cares about getting talked about, right? So we have Palantir, very, very common one. We have the one and only GameStop. So these are all some of the most popular stocks out there. And obviously we have some shares of Apple. We have Affirm and then Moderna in the Buzz ETF. So the biggest thing, should you buy this ETF? Well, this ETF is definitely going to be more of a higher risk, higher reward just because of the volatility with it, compared to a lot of other growth ETFs that more care about the fundamentals. They care about diversification, dividends. If we compare just the growth of Buzz to like VUG, this is Vanguard's growth ETF. Look at the difference. Beautiful upward trend. Common holdings in this one is Google, Amazon, Apple, some Tesla. It's just more diversified. You get a little bit of some dividends. It's nothing high risk, high reward. It's just one that has solid growth. Compared to Buzz is this, a little bit of some up and down, but if you understand the resistance, support, you can make some good money from it. Not to mention, these are going to be the stocks that could be the next Tesla, that could be the next, Apple, or among those, just because they're getting talked about so much. Not to mention all of those people that missed the opportunity of GameStop and Plug Power, even AMC. Buzz picked up those shares and made some money. So you can see, these massive spikes where the company made a lot of money. But should you buy it? I think it goes without saying this is a solid ETF, but it's more of a higher risk, higher reward. So a good strategy for this ETF is dollar cost averaging. Figure out a good principal balance that meets a lot of your criteria. So if you want to invest the total amount of $1,000 into Buzz, spread it out into weekly or monthly increments so you get a good average share price, so you don't have to worry about if it's going up or down. You just be consistent with your investments because you care more about the long-term outlook rather than just the year outlook. So guys, this is definitely one that carries a lot of potential, but overall a lot of risk. Not to mention the assets under watch is right at around 197 million, which seems like a lot, but if we compare it to the smallest Vanguard one, this is very, very small. Vanguard is extreme. It's way larger, but carries so much more growth. And not to mention, guys, the expense ratio is 0.75. And I know that is just a random number, but what it really means is it's almost at 1%. So every single year, they're virtually taking 0.75%. And if the ETF's losing money, this may not be the best ETF. Compare it to VUG. which has an ETF or has that expense ratio at 0.04, that's extremely small plus way better growth, not to mention dividends. So Buzz is definitely one that I would stay away from, but understand, yes, you could get in on some solid companies, but at the same time, you have to ask yourself, is there better opportunity elsewhere in the market? So guys, that is it. I hope you guys enjoyed it. And overall, I hope you guys got something of value out of this video. And if you did, hit that like button, subscribe to the channel, and we will see you guys later. Remember to stay happy, stay positive, stay safe. Take care.